Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets hidden in plain sight within corporate filings. And today we're diving into a filing that promises to be more than just a regulatory update. It is a peek behind the curtain of a company making some big shifts. Get ready because we're about to decode exactly what this important document means for the company and for investors. And hey, if you appreciate us cutting through the jargon and getting straight to the good stuff, make sure you are subscribed. We also have a fantastic Discord community where we break down these filings even further. It's linked in the description below. So come join the conversation. Alright, so what we have here is a post-effective amendment to a registration statement for Crescent Private Credit Income Corp. Now that might sound like a mouthful, but think of it as an update or a refinement to a document they've previously filed with the Securities and Exchange Commission, the C for short. This particular amendment is being filed to add some exhibits, which are essentially supporting documents. The key thing to know is that this isn't a brand new filing, it is building on something already in place. It's like adding new appendices to a book that's already been published to give you a little more context. Crescent Private Credit Income Corp is registered as a business development company, or BDC, which means it's a closed-end company designed to invest in and often help the growth of small and mid-sized businesses. They're also an emerging growth company, which gives them certain regulatory flexibilities, especially around accounting standards. This tells us they're using a specific rule, Rule 462 subsection D, to get this amendment filed, and it is associated with a registration statement that has the number 333 to 268,622. So they're not starting from scratch, they're amending an existing registration to add more paperwork, specifically exhibits. Think of exhibits as the proof or the supporting evidence for the claims made in the main document. For a BDC like this, the exhibits can include everything from their core governing documents to agreements they have with their investment advisors and service providers. It's like showing all the contracts and pieces of their business, so regulators can see everything is in order and that the company is operating as promised. Now let's get to the heart of the matter, the financials and the exhibits that support them. In this section, item 25, we see a list of their financial statements and exhibits. They've included audited consolidated statements of assets and liabilities, consolidated statements of operations, consolidated statements of changes in net assets, and consolidated statements of cash flows for the years ending the 31st of December 2024 and for the period from their start date in May 2023 through the 31st of December 2023. Crucially, we also find their consolidated schedule of investments as of the 31st of December 2024 and the 31st of December 2023. This is where we can really see what the company is invested in and how those investments have fared. When we look at the schedule of investments, we can see the types of assets Crescent Private Credit Income Corp holds. For example, in the 31st of December 2024 schedule, a significant portion of their investments are in what they call secured loans. These are loans that are backed by collateral, meaning if the borrower can't pay, the company has something to fall back on, which is generally less risky than unsecured loans. They also hold unsecured loans, mezzanine debt, and equity investments. The sheer volume of these investments is what drives their asset base and ultimately their profitability. For example, at the 31st of December 2024, the value of their investments in secured loans was a substantial figure, contributing a large chunk to their overall asset value. But the real question is, how are these investments performing? We can infer some of this from the statements of operations included in Part A, not fully detailed here but referenced. For instance, if their interest and fee income from these loans is growing year over year, it indicates the underlying businesses they are financing are healthy and repaying their obligations. Let's move on to the exhibits themselves. They're a treasure trove of information. We see a whole host of agreements here, like the Investment Advisory and Management Agreement, the Distribution Reinvestment Plan, and various custody agreements. These are the nuts and bolts of how the company operates. But what really catches the eye are the multiple loan and security agreements and sale and contribution agreements. For instance, we see a third amendment to a loan and security agreement dated May 29, 2025. This suggests that they are actively managing their borrowing and lending arrangements, perhaps renegotiating terms or adding new facilities. These agreements are the very lifeblood of a private credit income corporation, as they detail the terms under which they provide capital to other businesses and secure their own funding. An amendment like this could signify a shift in their financing strategy, perhaps securing more favorable rates or increasing their borrowing capacity to make more investments. Further down, we have a loan and security agreement dated the 17th of October 2025 involving CPCI Funding SPV LLC. The use of special purpose vehicles, or SPVs, is quite common in structured finance and credit markets. These entities are often created to isolate specific assets or a pool of assets for financing purposes. This agreement directly points to how Crescent Private Credit Income Corp is financing its operations and investments. The dates on these agreements are important too. A document dated the 17th of October 2025 indicates a very recent financial activity, showing the company is actively engaging in new financing and investment strategies. The fact that they are filing amendments and new agreements with these SPVs strongly suggests active portfolio management and potentially expansion. Now, while this particular filing is primarily for exhibits, we can also see a reference to the calculation of filing fee table. This is a standard part of SEC filings that details the fees paid to the C4, the registration of securities. It shows that they are paying for the registration of these securities, confirming this is part of an ongoing offering or registration process. It's a necessary but not particularly exciting part of the filing, but it signifies compliance with regulatory requirements. Looking at the number of shareholders listed here, specifically for Class I common stock, at the 31st of March 2025, it shows only 6 record holders. This is a very small number for a publicly registered company. It suggests that the ownership is concentrated, likely with institutional investors or initial seed investors, rather than a broad retail base. For a business development company, this isn't entirely unusual, especially if they are in the process of raising capital or if their shares are not widely traded on major exchanges. It indicates a controlled ownership structure at this point in time. In my opinion, Crescent Private Credit Income Corp is operating in a dynamic and complex market. As a business development company, their core strategy relies on judiciously deploying capital into private credit investments. The frequent amendments and new loan and security agreements, especially those in October 2025, suggest aggressive engagement with the private credit markets. This can be a double-edged sword. On one hand, it shows a company that is actively seeking opportunities to generate income and growth. On the other hand, it signals a reliance on debt financing and potentially a portfolio exposed to the inherent risks of private credit, such as illiquidity and credit defaults. The small number of shareholders, just 6 for Class I common stock, points to a highly concentrated ownership structure. This could mean better alignment between management and major investors, but it could also limit liquidity for smaller individual investors if they are looking to buy or sell shares. The company's status as an emerging growth company provides some regulatory breathing room, but investors should still keenly watch how they manage their debt facilities and the performance of their underlying investments. The story here is one of active management and a clear strategy to deploy capital in the private credit space, but it comes with the inherent risks and concentrated ownership that are typical of such specialized investment vehicles. Will they be able to generate consistent returns while managing their leverage? That is the million-dollar question. Alright, that is our breakdown of this Crescent Private Credit Income Corp filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.